Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's take a look again on the technical background on the gold market. So today as usual we have prepared vehicle report. We're trying to make the compilation of the important information for the United States economy. Actually, many things we already discussed in other reports, but the effect of today's report, first is we have considered some new issues, and second, when you're combining this information in a really tight space, you get really different effects. So you see clearly what's going on, despite what you hear in the mass media speaking by the analysis. So usually they are focused on some particular data that has been released or so. So inflation data, the whole week is dedicated to inflation. In the gross domestic product report, everybody talked about the gross domestic product, the same in the job market. But when you just take a look at a few indicators from each subject and put it together, you get very fast, real clear picture of what's going on. And actually, you will see why we keep the long-term bullish view on the gold market, because it's very representative. So that's what we have done in the gold report this time. It's mostly because we have just few data this week on economical data. Mostly the financial information was overshadowed by the political events, debates, and so on. So returning back to the technical side, to be honest guys, on the long-term charts, I would consider only one big combination of the charts. First is the long-term chart on the gold market and on the dollar index. The nuance and the tricky moment stands that both markets stands in a tight consolidation and both markets stands on the top, which is actually not typical, as you understand. They usually move in the opposite direction. When everything is great in the world, gold is rising, when the dollar is dropping. It's not logical. But if you take the brief look at the gold market right now, which stands around the top, forming triangle consolidation, this is daily chart, and you will take the same brief look at the dollar index, which is a bit of the larger scale, it's monthly chart, but it also stands near the top and is forming the tight consolidation. And the major question here is what particularly should happen to justify this behavior, as on the dollar index and as on the gold. This is a question that you could try to answer by yourself, but usually this happens when something really big and loud is coming. It indicates some kind of the running in the safe haven demand. So that's what most interesting stuff we have on the longer term charts. Because if you're trying to dig the analysis of the monthly chart on the golds, nothing has changed actually, because market stands for the third month in a row inside of the previous swings and brings no changes to long-term picture. So it's still calling around the top. But this cross-market analysis really makes you think about why this combination is possible. So on lower time frame, here we also have something to think about. First of all, recall our concern about the price behavior as longer we're going, as deeper we're going in time, as actually more markets start showing side of the triangle and consolidation. And this is a bit curious performance if you combine it with the double repo sell pattern that we have on a weekly chart. So as I said in the report today, this maybe we're a bit out of timing and we need to wait a bit more to see, but this combination of the market has formed strong bearish pattern on the weekly chart and was not able to reach the minimum retracement levels, so 30% pullback. In more than 4 weeks, it starts looking a bit bullish. If we wait a bit more and market will remain in the same range, we start getting kind signs of the bullish dynamic pressure with this possible upward performance. And also, as market starts moving out of the monthly overbought pressure, as more bullish signs it start showing on lower time frames. So it could happen so that actually we're getting not some preparation for a deeper drop, but preparation for a possible upward continuation. It's also possible. So, but on Fridays you can see bears have got some relief in a way of appearing of the bearish grabber, and this bearish grabber gives us actually, from the one point of view, great trading setup on the lower time frame that we could follow, but at the same second it makes complex to deal with the intraday charts because it actually forms the opposite pattern to the one that we have. So recall what we talked about. This performance we get bullish engulfing pattern, very nice upward action. Also start discussing the possible head and shoulders on the lower time frame, as you will see. And appearing of this grabber, it breaks the plans of the bulls actually, or at least make them significantly more difficult. And here it's very difficult will be to decide what to do. So if you actually thinking about taking a long position, that will be the headache, because you have the bullish pattern in place, but at the same time you have a bearish pattern on the daily chart that promise you more significant risk. And the compromise that you will have to find, either to wait when this grabber will fail, or what to do in current circumstances. So on the 4 time frame chart, let's take a look. Appearing on the grabber itself breathed new life in actually this butterfly that we already talked about, and appearing on grabber on top clearly point on the top of the right wing and potential point where wing is completed and the market is ready to go down, right? This is the idea of the grabber itself. So we know that invalidation point stands on the top. This market should not overcome if it indeed bearish and market's ready to go lower, which clearly point us where we have to place our stops, dealing with all this pattern and grabber in particular. So, and the minimum target of the grabber will be taken out of these lows, but potentially if butterfly starts working, we could consider 127 extension around 2267, which is precisely an daily confidence support. So with the bearish context, everything stands clear. Now, what we're going to do with the bullish context that we already have in place and we discussed last week. Just to remind you, recall what we talked about this performance. On Friday, we've got our action to the 2340. This was just that neckline has been reached. And now we have in place, or better to say under construction still, reversed hand and shoulders pattern. So performance here to the upside was relatively strong. You can see what the action was. And if we wouldn't have any grabber, we should consider taking the long position around 2315, 2320 area. But appearing with the grabber breaks these plans and makes it not comfortable trying to take the long position, where there are really signs that it's just could fail, market could break this down. What we could do in the current circumstances, how to combine all this stuff? Well, I see a possible solution with this minor pattern to the right. So actually grabber that we have on the daily also could take the shape of the small head and shoulders pattern, right? And take a look at the neckline of this pattern coincides with the potential area where we should consider taking the long position, right? So that's why if everything works in this way, we still could consider taking the long position. And when the market will start forming right arm of this small pattern, we could move stops to the break-even and then see what will happen. If daily grabber will fail, and chances exist for that, just based on the background of this performance, is rather strong, and in general by the performance of the overall construction here on the daily chart. So if grabber will fail and market keep going higher, you will be on the market with the position and with the bullish pattern in place that starts working, with the potential target around 2370. If grabber still starts working and hand shorter starts working and market will break the area, you will go out on the break even. And also later you will be able also to reverse the position, to take the short position. So that's simple logic that we could try to follow. If you, of course, would like to combine this. Another solution is that choose only one pattern and watch for it. In this situation, the advantage stands in favor of the bears. Why? Because this pattern, and actually it is not completed yet, it's not stands in place, and it is not canceling the grabber. So it is not the pattern that increases the risk for the grabber. Grabber is working by itself, it's already stands in place and ready to act. While an opposite situation, grabber directly brings the hazard to bullish pattern. From that standpoint of view, bears stands in a bit better position. And if you'd like to go with just this pattern and do not want to take position at this area, well, one of the possible scenarios might be to wait when the market will start up correction and erase the grabber. But in this situation, as you understand, the take the position will be more difficult challenge, because you will have to decide where to place stop. Entry price will be much worse, and maybe it could happen that you will just miss this opportunity. So unfortunately I can't decide for everybody, and because everybody has different risk aversion, different psychological comfort for trading. So here you will have to make some decisions by yourself and decide on what particular pattern do you like, and how you intend to deal with this. I'm just offer you some options that you could think about and then make your own decision.